What's up everyone, I'm Kidsada, and let me ask you something. Are you tired of seeing your savings account barely budge? Do you want to see your money actually? Because today we're diving into the world of investing, specifically in stocks. And the best part is, you don't need a ton of cash to get started. We're talking about starting with just $100. That's right, the cost of a dinner out could be the beginning of your investing journey. Now, before you click away thinking this is just another get-rich-quick scheme, let me stop you right there. This is about building long-term wealth, the right way. This is about understanding how stocks can be your secret weapon to financial freedom. So if you're ready to take control of your financial future and learn how to make your money work for, buckle up, smash that like button, and let's get started. Alright, let's talk about everyone's favorite topic, compound growth. Now I know it might sound a little intimidating, but trust me, it's actually a pretty simple concept. Imagine this, you invest just $100 today, not a life-changing amount, right? But hold on, because here's where the magic happens. With compound growth, your money doesn't just earn returns. Those returns then earn returns themselves. It's like a snowball rolling down a hill, getting bigger and bigger over time. Let's say you invest that $100 and earn a modest 7% return in the first year. You're now up to $107, not bad. But here's the kicker. The next year, you're not just earning 7% on your initial $100, you're earning 7% on the $107. And so on and so on. Over time, those seemingly small gains start to add up exponentially. Think about it, even a small amount invested consistently over a long period can grow into a significant sum. This is why starting early is so crucial when it comes to investing. The earlier you begin, the more time your money has to compound and grow. Now you might be thinking, Graham, I'm not exactly Warren Buffett here. Will my $100 even make a difference? Here's the thing, it's not about the size of your initial investment, it's about the consistency and the power of time. Even if you can only afford to invest $50 or $100 a month, that's okay. The important thing is to develop the habit of investing regularly. Remember, Rome wasn't built in a day, and neither is a solid investment portfolio. The key takeaway here is that compound growth is your best friend when it comes to investing. The sooner you start, the more you benefit from this incredible force. Don't underestimate the power of even small, consistent investments over time. They can truly add up and help you build real wealth. Alright, let's talk about inflation for a second. It's not the most exciting topic, but it's crucial to understand, especially when it comes to your investments. In simple terms, inflation is the rate at which prices for goods and services increase over time. Think about it, that cup of coffee you used to get for $2, it might be $2.50 now, and a few years down the line it could be even more. That's inflation at work. Now what does this have to do with your hard-earned cash? Well, if you're just keeping your money in a savings account, it's slowly losing value over time due to inflation. Let me explain. If you have $1,000 in your savings account earning a measly 0.05% interest, and inflation is running at 2%, you're actually purchasing power. Your money isn't growing fast enough to keep up with the rising cost of goods and services. This is where investing in stocks comes into play. Historically, the stock market has returned an average of around 7 to 10% per year. While past performance is not indicative of future results, this long-term trend suggests that investing in stocks can be a powerful way to outpace inflation and actually grow your wealth. By investing in companies that are increasing in value and generating profits, you're essentially putting your money to work for you. Your investments have the potential to grow at a rate that outpaces inflation, meaning your money is actually in value over time. Now I know what you're thinking, investing in the stock market can seem risky, right? And yes, there are always risks involved, but over the long term, the stock market has consistently trended upwards. This doesn't mean you should throw all your money into the market blindly. Diversification is key, but we'll get into that later. The point is, by investing in stocks, you're giving your money a fighting chance against inflation. You're not just watching your savings slowly erode away. You're giving yourself the opportunity to build real wealth and achieve your financial goals. Chapter 3. The beauty of passive income, getting paid to own stocks. Let's talk about one of my favorite things in the world, passive income. It's the holy grail of personal finance, making money without actively working for it. And guess what? Investing in stocks can be a fantastic way to generate passive income. How? Through the power of dividends. Now, not all stocks pay dividends, but many companies do. Essentially, when you own dividend-paying stocks, you're getting paid a portion of the company's profits just for being a shareholder. It's like getting a bonus check just for holding on to your investment. Think about it. You buy a share of a company you believe in, and then, every quarter like clockwork, that company sends you a little thank you payment just for being a loyal investor. That's the beauty of dividends. Now, dividend payments can vary depending on the company and the stock. Some companies pay small, consistent dividends, while others pay larger, less frequent dividends. The key is to find companies with a solid track record of dividend payments and a history of increasing those payments over time. But here's where it gets really exciting. You can reinvest those dividends. That's right, instead of pocketing that dividend payment, you can use it to buy more shares of the company's stock. This is where the power of compounding really kicks into high gear. By reinvesting your dividends, you're essentially buying more shares that will then generate more dividends, which you can then reinvest to buy even more shares. It's a beautiful cycle of passive income growth. Now, dividend investing isn't about getting rich quick. It's a long-term strategy that requires patience and discipline. But over time, those consistent dividend payments can add up significantly and provide you with a steady stream of passive income. Chapter 4. Liquidity. Access your money when you need it. One of the biggest misconceptions about investing, especially in stocks, is that your money is locked away indefinitely. People hear long-term investing and imagine their hard-earned cash being completely inaccessible for decades. But that's not the case, especially with stocks. One of the major advantages of investing in the stock market is its liquidity. Liquidity simply means how easily you can buy or sell an asset without affecting its price. Think about it like this. Imagine trying to sell a house quickly. It takes time, effort, and often involves price reductions to attract a buyer. That's because real estate is considered an illiquid asset. Now compare that to selling stocks. With a few taps on your phone or clicks on your computer, you can sell your shares on the stock market almost instantly. Of course, the actual time it takes for the funds to settle in your account might vary slightly depending on your brokerage. But the point is, stocks are highly liquid. This liquidity gives you a level of flexibility and control over your investments that you don't get with many other asset classes. Need to access some cash for an unexpected expense? You can sell a portion of your stock portfolio without jumping through hoops or waiting months for a buyer. Of course, this doesn't mean you should treat the stock market like your personal ATM. Remember, we're in this for the long haul. But knowing that you have access to your money if needed can provide peace of mind and make investing less intimidating, especially for beginners. Chapter 5. Flexibility and Control. Investing on your terms. One of the things I love most about investing in stocks is the incredible flexibility it offers. Unlike other investments that might lock you into specific strategies or limit your options, the stock market is like a massive playground for investors of all levels. Whether you're a seasoned pro or just starting out, there's a way to tailor your investments to match your individual goals, risk tolerance, and interests. Are you all about innovation and believe in the potential of cutting-edge tech? You can focus on investing in growth-oriented technology stocks. Prefer a more conservative approach? Blue-chip stocks, often representing well-established stable companies, might be more your style. Want to diversify your portfolio and track the performance of the entire market? Exchange-traded funds, ETFs, are your friend. These investment vehicles allow you to invest in a basket of stocks, bonds, or other assets with a single purchase, providing instant diversification. The point is, investing in stocks isn't a one-size-fits-all approach. You have the power to choose how you want to invest, how much risk you're comfortable taking, and which sectors or companies align with your values and beliefs. This level of customization is what makes stock market investing so empowering. You're not just handing over your money and hoping for the best, you're actively participating in your financial future and making decisions that align with your overall goals. And the best part, as you learn and grow as an investor, your investment strategy can evolve with you. You can adjust your portfolio, explore new sectors, and refine your approach based on your experiences and changing financial circumstances. So there you have it, guys. Investing in stocks doesn't have to be intimidating. Remember, you don't need to be a Wall Street whiz or have a ton of money to get started. Even with just $100, you can begin your investing journey and start building wealth for your future. The key is to take action. Don't let another day go by without putting your money to work for you. Open a brokerage account, do your research, and start investing in companies you believe in. The best time to start was yesterday, but the second best time is right now. Remember, investing is a marathon, not a sprint. There will be ups and downs along the way, but by staying consistent, diversifying your investments, and focusing on the long term, you'll be amazed at what you can achieve. Now get out there and start building your financial future. Your turn. Open a brokerage account this week and invest just $10. Remember, the best time to start was yesterday. The second best is today. Like this video if you learned something new. Subscribe for more. Next week we're decoding crypto for beginners. And comment. What's the first stock you'll invest in?